It's an even worse day for Silvergate Capital.
Silvergate Capital.
Silvergate.
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 Silvergate Capital.
Silvergate.
Troubled crypto bank Silvergate.
One of the two main banks for the crypto industry is shutting down operations and liquidating.
Silvergate Capital is shutting down. They are planning to liquidate their businesses in an orderly manner. It may not be a bankruptcy, but it's the same thing. No one will be able to use Silvergate banking services anymore. Silvergate was one of the most critical banks for crypto. It was so big, virtually all of the big crypto exchanges used it. Silvergate was a crypto banking behemoth. Then it went from $200 a share at their peak a few years ago down to $3 a share.
This thing was already down more than 90% from its all-time highs.
Laying off 40% of their employees before choosing to shut down. So how did Silvergate Bank collapse? To answer this question, we must go back to how Silvergate Bank was created. Silvergate Bank was founded in 1988. The Californian bank was doing alright. They were just a small-time bank which lent money for real estate. That was until 2014, when Silvergate decided they should start providing crypto accounts to customers.
Saw back in 2013 was that there were these new companies being formed to provide services to this new digital asset called Bitcoin. And I was reading about Bitcoin in 2013, and what I was reading was that with Bitcoin you could be your own bank. And I thought, well, gosh, that's interesting. I wonder how that's going to work.
Silvergate CEO Alan Lane personally bought some Bitcoin to show his commitment to the idea of a crypto bank. Alan Lane wanted to grow his tiny Silvergate bank. However, for a bank to grow, they needed customers to deposit money into Silvergate bank accounts. Alan saw how Coinbase, one of the top crypto companies, met with rejection over and over again when asking for banking access, and saw an opportunity. He said to himself, if he could provide banking services to Coinbase and other crypto companies, he would be able to get those customer deposits from crypto lovers. Silvergate was an early pioneer in the space. They started offering banking services to crypto startups when Bitcoin was hovering between $300 to $700. Way back then, in 2014, crypto exchanges didn't have a way for customers to buy crypto with their credit cards. They needed banks for that. Crypto exchanges found out the hard way that they needed a bank to process transactions for when a customer uses dollars to buy crypto and when a customer wants to sell their crypto for dollars before withdrawal. The problem was, back then, many banks didn't understand crypto. Crypto was linked to black market dealings, Mexican cartels, drug kingpins, and money laundering operations. So no bank wanted to take on the risk of providing banking services to shady crypto exchanges.
I am not a criminal.
After all the spiel and the ideals of crypto replacing fiat currency, it turns out that crypto needed the banks more than the banks needed them. Silvergate Bank was one of the only banks who thought differently. Thanks to Alan Lane, they saw an opportunity in crypto and offered banking access to crypto exchanges. Silvergate said yes to crypto exchanges when other banks said no.
And they were being shunned by the broader banking ecosystem. So where other folks just saw risk, we saw potential opportunity.
This allowed them to become one of the three top banks catering to crypto: Signature Bank, Metropolitan Bank, and most importantly, Silvergate Capital. They were the big three in the crypto banking industry. These days, all the important crypto exchanges allow you to use your credit card to purchase crypto directly with dollars, and when you want to take the money out, the exchange converts the crypto into US dollars and deposits it back into your bank account, making crypto trading more accessible than ever. Many crypto startups were grateful to Silvergate Bank for giving their customers banking access. Now everyone could buy crypto from exchanges with a credit card. Silvergate Bank went further and created a real-time payment system called the Silvergate Exchange Network. With the Silvergate network, crypto depositors could make US dollar transfers and loans outside of traditional banking hours like weekends. This was a boon for crypto exchanges because traditional exchanges like the New York Stock Exchange close on the weekends. Crypto exchanges, on the other hand, were open 24/7 since blockchain miners were mining 24/7. Big names like Coinbase, Kraken, the Gemini Exchange, and many other major exchanges were all using the Silvergate network. This was the rise of Silvergate.
Silvergate Exchange Network, or the SEN. And what it does is it allows our customers to transfer US dollars between themselves 24 hours a day, 7 days a week, which is coincidentally, the hours that the cryptocurrency markets trade. They never sleep. And so we were, I think, the first bank in the world to bring the legacy banking system that only operates normal business hours Monday to Friday into the cryptocurrency 24/7, 365 global trading market.
Silvergate's entry into the crypto markets was a smashing success. It only had $1.8 billion in deposits in 2018. By 2021, at Silvergate Bank's peak, they had deposits of $14 billion and $16 billion in assets. Silvergate went public in 2019 at $13 a share, and by November 2021, literally 2 years later, when crypto was booming, they reached $219 per share, a 1,500% increase in the stock price within a couple years. Warren Buffett would kill to have those gains. However, not everything lasts forever, and crypto markets were cooling. Customers were leaving with their deposits. Silvergate's stock price began falling, but it was nothing Silvergate Bank, with over $11 billion of customer deposits, couldn't handle, was what they thought. Then everything came crashing down in late 2022 last year. FTX, one of the largest exchanges in the crypto world, collapsed. This triggered a massive contagion that spread throughout the crypto markets like wildfire. Trillions of dollars were wiped off the crypto industry in a heartbeat. FTX's collapse meant billions of dollars, roughly $8 billion of customer deposits, left Silvergate. So let the customers take their money out, Silvergate Bank. The problem was, Silvergate didn't have enough money to meet customer demand. So many of their customers were taking their money out of Silvergate, it almost caused a bank run. To stop this from happening, Silvergate was forced to borrow $4.3 billion in loans from the Federal Home Loan Bank loan system, which is a lender of last resort. A lender of last resort is the institution that offers loans to banks that are experiencing extreme financial difficulty or are near total collapse. This shows how desperate Silvergate was when they borrowed those $4 billion. At the end of the FTX exodus, the Silvergate Bank was left with only $3.8 billion in customer deposits. Making things worse was Silvergate Bank had those FTX deposits under its care, linking it to one of the worst frauds in the history of crypto, FTX. This meant regulators were furious at Silvergate. Silvergate came under fire for aiding FTX in their scheme. There was no proof of fraud, but US lawmakers were suspicious of Silvergate. How was Silvergate Bank incapable of catching billions of dollars of suspicious transactions between FTX and its sister firm Alameda Research? US senators like Elizabeth Warren asked Silvergate to explain itself in December last year.
Senator Elizabeth Warren and two Republican colleagues asked the company for information about the bank's relationship with FTX and the other Sam Bankman-Fried entities. Silvergate was a banker to FTX prior to the fallout.
A failure to detect Sam Bankman-Fried's fraud scheme meant Silvergate may have breached anti-money laundering laws. It was too much for Silvergate stock. It kept free-falling. Cathie Wood sold 99% of her Silvergate shares. Legendary hedge fund manager George Soros bought $1.7 million worth of put options for 100,000 Silvergate shares, expecting Silvergate to collapse. By February 2023, Silvergate was among the most shorted stocks in the US. Back to January 2023, US senators asked Silvergate Bank again for details about their management practices and their dealings with FTX. They accused Silvergate of introducing crypto market risk into the traditional banking system. Just as Silvergate was experiencing its worst crisis yet, a miracle happened. Silvergate saw some light at the end of the tunnel as State Street, one of the largest asset management firms with over $3.9 trillion of assets under their management, revealed it took a 9% stake in Silvergate in December last year. Entities who hold more than 5% of a company's stock has to file a 13G to the SEC to disclose their shares publicly. That was how everyone found out about State Street's investment in Silvergate shares. Silvergate stock shot up at the revelation, going up by 40%. Some small rallies were seen in other crypto stocks as well. Surely, if one of the largest trillion-dollar asset managers believed in Silvergate's survival, then maybe Silvergate could live through the government investigations and all the controversy. Then more good news, Citadel Securities took a 5.5% stake in Silvergate stock. One asset manager taking more than 5% in your company was admirable, but two? Perhaps this was Silvergate's chance to save itself. Crypto investors were ecstatic. Silvergate Bank would live to see another day. Then the first warning signs started pouring in. On March 1st, 1st, the day when the deadline for companies to file their annual 10K reports came, Silvergate dropped a bombshell announcement. Silvergate warned it was delaying its annual report
after the crypto-friendly bank delayed their annual financial report.
That this confirms a lot of fears that regulators had, basically that banks can't handle cryptocurrency-related risks.
Saying continuing to operate the bank was a going concern for the next 12 months. The bank was about to report $1 billion in losses. Silvergate Bank also disclosed that the delayed filing was partly because of the Department of Justice's probe into the company for its FTX connections. There was also an additional imminent regulatory crackdown, congressional inquiries, investigations from banking regulators, including the Federal Reserve and the California Department of Financial Protection and Innovation. In their notification form for late filing filed to the SEC, Silvergate reported they would experience further losses, meaning they may have lost more than $1 billion. Silvergate said it lost more money after selling even more securities at a loss to repay its small loan of $4 billion from the Federal Home Loan Bank of San Francisco. This was the same $4 billion in loans that Silvergate was forced to take after the FTX scandal exodus. They also said these losses would negatively impact their regulatory capital ratios and could result in the bank being less than well capitalized. FTX's collapse had claimed its new victim. With the loss of billions of dollars of customer deposits, Silvergate's capital relative to their assets shrank. This leverage ratio fell to 5.3% last year. Regulators have to step in for any US bank with a leverage ratio below 5%. It was official. Silvergate Bank had run out of money to manage the bank. They said they had trouble operating the bank for the next 12 months. The company also said it was re-evaluating its businesses and strategies in response to the company's businesses and regulatory challenges. Silvergate's stock price began free-falling, but that didn't matter. The worst was yet to come. Then the crypto exchange exodus began. This would spark the collapse of Silvergate Bank within a week. On March 2nd, after finding out Silvergate's ability to stay in the business was uncertain, Coinbase, the largest crypto exchange in the US, released a flurry of tweets saying it would terminate its partnership with Silvergate Capital. In the company's tweet, Coinbase announced that it would no longer accept or initiate payments to or from Silvergate. Coinbase threw Silvergate under the bus and said their clients' funds were safe. They repeated that Coinbase had minimal corporate exposure to Silvergate. The dominoes were falling. More crypto firms came out of the woodwork to cut ties with a once crucial partner that had helped link these fledgling crypto startups to the traditional banking system. Paxos said it did not have any exposure to Silvergate Bank and stopped all Silvergate network transfers. MicroStrategy said they may have had a loan from Silvergate, but the loan wouldn't worsen with Silvergate's bankruptcy. The Bitstamp exchange tweeted they would no longer process transfers with Silvergate Bank. Moving forward, all bank transfer services would be done by their other banking partners. Circle told everyone they were trying to unwind some services related to Silvergate. The Gemini exchange, owned by the Winklevoss twins, said they had zero customer funds held at Silvergate and stopped accepting customer deposits and transfers through Silvergate. They said all their customers' US dollars were in US FDIC insured banks. Galaxy, a crypto asset management company which launched a crypto index fund with Bloomberg, released a tweet saying that Galaxy had stopped accepting and initiating transfers to Silvergate and that the firm and customer assets were secure. Galaxy's partner, Bart, sent out a tweet saying they were monitoring the situation with Silvergate and were discontinuing the usage of some services. Kraken, which tells everyone Silvergate Bank was a faster way to deposit or withdraw US dollars, terminated their relationship with Silvergate. Even the chief technology officer of the world's most popular, or rather the most hated stablecoin, Tether, put out a tweet saying Tether does not have any exposure to Silvergate. On March 3rd, the very next day, more exchanges like OKCoin released a tweet stating its exposure to Silvergate was limited and that all customer funds were safe. More exchanges followed suit in assuring their customers that their ties to Silvergate Capital were not jeopardizing customer funds. One exchange, called Crypto.com, literally sent an email to Reuters saying it was suspending US deposits through Silvergate for the sake of safety. Every crypto exchange said they were doing their best to protect customer funds and assured their customers that Silvergate's problems would not impact their services too much. All other companies with any association with Silvergate were trying to distance themselves from the Silvergate collapse. It was unanimous. All the crypto exchanges and firms were doing damage control. They were all throwing Silvergate under the bus. banks. They told their customers their funds were safe and Silvergate's downfall had nothing to do with them. The slew of crypto heavyweights who were ex-partners giving up of Silvergate Bank was too much for the bank to handle. This was the final nail on Silvergate Bank's coffin. On March 3rd, Silvergate Bank had enough. It discontinued its Silvergate Exchange network. One of its core offerings to users, payments through the Silvergate network, was stopped completely. It was the beginning of the end. Then, on March 8, 2023, Silvergate Capital announced it would formally wind down operations and liquidate their Silvergate Bank. A liquidation plan shared on Wednesday assured crypto investors that all deposits will be fully repaid. On March 9th, an employee at Silvergate revealed a blurry leaked email from the CEO of Silvergate. In it, employees at the Silvergate Bank have been told to prepare for liquidation and imminent shutdown. They were also told to remain with Silvergate Bank for at least 60 days to deal with the company's shutdown. Their exit packages would be discussed at a later date. It was over. Silvergate Bank was shutting down. So far, Silvergate hasn't said how it plans to resolve the claims against its businesses stemming from the FTX controversy. According to a White House spokesperson, the Biden administration said they were aware of the Silvergate situation and were monitoring reports on the troubled bank. The Department of Justice is still investigating Silvergate's involvement with the FTX. For the government, Silvergate's downfall will be an excuse to finally clamp down further on the crypto industry. For George Soros, he just made a boatload of tendies shorting Silvergate shares. For Silvergate customers, they are waiting for the full repayment of their deposits. They want their money back. For the banks, Silvergate serves as a warning to all banks who want to do business with the crypto exchanges. It's just too risky. Finding a bank to work with was already hard enough for crypto exchanges when crypto was booming. After the Silvergate crisis, banks are more reluctant than ever to provide banking services to the crypto community. Thank you for watching, like and subscribe.